Rahul Shah, from a market standpoint, what's happening in Israel, sad, unfortunate, tragic, but from a financial market standpoint, looks like it's time to move on.
So can you just repeat it? On a financial market support?
From a financial market standpoint, is it time to move on?
So hi, good morning. So I think we see a lot of concerns going on here and globally and all. So I think two, three things for India perspective. So I think way the markets are still trading at a reasonable valuations, right? So obviously mid caps and large caps, if we compare that, so mid cap and small caps obviously are trading at a way behind in terms of premium valuations, and the valuations are rich, and large caps have underperformed. So I feel that overall market perspective, I think will not be anything great on a negative side. But I think this earnings season, what we get hold of it. So looks like that it should also be a good earnings season as well. So my sense is I think large cap stocks will outperform, mid caps and small caps might take a breather. But I think whenever we have seen the large caps performing, mid caps and small caps also rally. But I think way they have rallied, I feel it's time for a large cap. And usually in an election year, if we have seen that just before the elections, a 6 months period, the last 25-year data, if we remove say from 1999, what it suggests that I think markets have rallied 10 to 32%, 10 being the lowest, and in a couple of years, it has been also been 25 and 30%. So my sense is I think, and valuation-wise, markets are still reasonable. There's no euphoric conditions. So stable interest rates environment, inflation under control, and numbers have been quite good overall. So I think looks like that markets will continue to do well. It does not look like that. I think maybe that we might see some kind of a sell-off in immediate, maybe 4-5%, and then markets just stabilizing there and again building it back again. So my sense is that I think we should continue to hold on, or maybe this opportunity in sell-off, one should participate.
So how and where are you participating then, Rahul? If you could be a little bit more explicit by way of individual stocks, you're saying large caps. So which ones are looking appealing at the current juncture? Would it be banks? Would it be the likes of a Reliance Industries? What's the view?
So I think obviously the big outperformer, what we think and what we are overweight are is on a banking. So I think way the markets have been, the banking stocks have underperformed. So what we are looking at, where there's a value plus growth in this entire banking as a sector. So I think obviously private and public sector banks, if we compare, public sector bank has done quite well in quarter on quarter, and they have outperformed it. And if you look at private sector banks, have just stayed put or they have corrected in a quarter on quarter basis. So my sense is I think a mix of both. So maybe in a large cap play. So I think risk versus reward, HDFC Bank looks like a stable, maybe a quarter, maybe a dull quarter this quarter. But if you are a little bit of longer horizon, I think HDFC Bank should outperform. So risk versus rewards, again, HDFC Bank will lead it. Then obviously the PSU pack as a basket. So we like large cap PSU banks like Canara Bank, like State Bank of India, Bank of Baroda. So these three are large players in that, and followed by I think I started by value and growth. So I think we've added EU Bank also, and what we feel that EU Bank should do well. So maybe in last FY 19 to 23, the way that their growth perspective has been in small finance. So I think again the stocks have corrected, and I think reasonable valuation what we feel versus the growth which is going to get. So I think these are the areas where in a banks what we like.
I'm going to just change gears and talk about IT. And Nuresh, who would have thought 3 months ago that TCS will bounce right back up and will march to a fresh 52-week high?
Absolutely. So TCS has been a stock which has shown a lot of resilience over the last few months. And mind you, in the previous rally, it was a relative underperformer in that 2020 to 21 move. So in that sense, the stock has done well in this current rally. Out here, the base has been made very strong. We had multiple attempts around that 3,000, 3,200 mark. And now that base has shifted to 3,300 to 3,450 levels. So the view is going forward slowly and steadily. The stock remains a buy on dips and could be the first one in the two heavyweights like Infosys and TCS. The first one to actually go to a previous highs would be TCS. So expected to be a good defensive play on dips. out here any reaction, negative reaction on results or any opportunity which comes down, it would be a good buy on dips.
With us, lots more to chat about. Let's move right on and let's track all the smart portfolios as promised from ACE Investors. Today, we're picking out Mukul Agarwal, Dolly Khanna, Ajay Upadhyay's portfolios and finding out what are some of the changes that have been made. Sharad has compiled all this data and now joins us. Sharad?
Well, yes, in focus we are having what the ACE investors have been buying and selling in the second quarter, and do remember now the September's shareholding pattern has actually come out, and it's been last 1 or 2 days when the entire updating of portfolio is happening. And at first we are having Mukul Agarwal, Capsite Infra, post the conversion in the preferential issue, now his stake has gone up to 8%. Earlier it was almost 4% plus. Also 2 new entries coming in, that means his stake had been below 1%, or there has been a new entry, and first time name coming in Prakash Industries and Gensol Engineering with a stake of almost 1.4 to 1.64% respectively. Apart from this, also if you look at Dolly Khanna's new entries, we look at Prakash Industries, there's a new entry coming in with 1% stake, and also Prakash Pipes, that is where the stake has been hiked by roughly 40 basis points, coming in at 3.2%. And lastly, we have Ajay Upadhyay, where he has increased his stake in Precision Camshafts by almost 10 basis points to 2%. Now, this is a very developing story when it comes to the shareholding pattern changes, and we'll be getting you new updated numbers as well.
Very, very interesting in terms of where the HNI activity seems to be moving. I just want to bring this point out, and yesterday I saw data which is that the number of demat accounts which have opened are up 20% sequentially. We've got 13 crore demat accounts now, 13 crore demat account. Just think about it. The population of India, 140 crore, 13 crore demat account, which means technically 10% of Indians now have demat account. And demat account sometimes is owned by a family, which is that in one demat account, it actually could be the wealth of a family per se. So that I think is very, very important for us to remember, that the trend of SIP is important. But the way demat accounts are also opening, even if you assume that 25% is dominant, then also we're looking at a number of about 8 to 9 crore. So 8 to 9 crore active demat accounts in India. I mean, what a change it's been in the last couple of years. Financial market have really become the mainstream in terms of how the incremental demat accounts are now moving. So Rahul Shah, if somebody is opening a new demat account or has opened a new demat account and he wants to buy 3 shares for next 5 years, which are the 3 stocks you would advise for somebody who just opened a demat account? वो कहते हैं ना शगुन के 3 शेयर कौन से होने चाहिए?
So I think I've been very overweight on HDFC Bank as of now. So I think 100% HDFC Bank will be my largest bet on if somebody is looking for 5 year story. Second is Bharti Airtel. I think consistent compounder. I think where the stock has done and where the markets looks like. And thirdly, what I feel is from the pharma space, Sun Pharma. So these 3 stocks looks like in a large cap space for the next 5 years if somebody is looking at for building a portfolio. So I think these 3 stocks which I would recommend.
Okay, those are some integral must-haves in your portfolio in case you're wanting to build one or use this buying or rather use this decline in the market currently if it were to persist as some of the fresh additions in your portfolio. But Naresh, let's talk about HDFC Bank. The stark underperformance in the name, bearing heavily right now on the Nifty Bank's underperformance as well. Where do you see the stock move both in the near term as well as the medium haul?
So in the near term, the stock looks very, very sideways. Now, if you go back in time, the stock used to trade around this 1500 mark before the merger announcement got done. And in that period also 1400, 1450 was the low for almost 2021. We dipped lower in 2022. But post the merger also, we've seen multiple times 1700, 1750 has been a problem. 1500 is the pivot point. If it starts sustaining below 1500, then it gets into a deeper downturn wherein it could even go lower towards 1450. But now 1500 seems to be holding on. The last recovery was pretty strong. We saw a bit of a correction in the last 2 sessions, but 1500 is the pivot point. On the upside, 1600, 1630, which was the gap down we saw very recently. Till the time we don't cross that levels, the trend does not change. So this remains a problem zone for the index in terms of being a more than 12 to 14% weight. The stock remains sideways. And as of now, there are no indications of a turnaround or a further breakdown.
Okay, that's the take coming in on which way HDFC Bank's charts may be headed. Let's take stock of what are the stocks which are going to be in focus this morning. We've already flagged off Adani Ports and the CLSA note which has come in on Adani Ports, recommending the current decline, if at all it persists, as a buying opportunity and saying that yesterday's fall in the stock was quite over-exaggerated. There's Mazgaon Dock, which has got an LOI with a European client for a multi-purpose hybrid power vessel. So look out for what that stock does. IDFC First, they've sold their office at BKC to NSDL for 198 odd crore rupees. So that's going to be another stock which is going to be in focus. And then, of course, there's Concor as well, wherein the Q2 total volumes have seen an uptick of about 8%, or 7.5% actually to be precise. And the domestic volumes have risen about 26 odd percent, but this is much lower than what the market was penciling in perhaps. Maruti, they plan to end the contract manufacturing agreement with SMG. They've shared their capex plans as well, and that in addition to an announcement of a slew of discounts as well that they are going to be taking up at the ongoing festival season. Rahul, just wanted to get your sense in on how do you think the upcoming festive season is going to pan out for Motown and especially for passenger vehicles?
So I feel that obviously the passenger vehicles has been doing quite well, and if you look at Maruti's numbers or Tata Motors number, or in terms of maybe both of them, or maybe in commercial vehicles if you go Ashok Leyland. So I think the numbers have been pretty good, and looks like that in this festive season also should continue to grow. I think 2-3 factors for Maruti. I think if you look at the total sales in last 6 months or maybe a year, if you look at the composition of Maruti's sales is towards 50% of the sales comes from the SUV segment, or what we have been looking at it. So I think this is important from a lower end car segment sales or small cars, what we've been talking about a few years back in Maruti, and shift has been into the SUV segment. So I think this quarter also, and maybe this season also, should be good for Maruti. Easing of the chip supplies and inventory levels getting it lower. So I think all these factors will help Maruti as well. So I think Maruti remains a top bet in that entire sector. Followed by what we feel is that I think commercial vehicle also should do well in a BFSI, in auto space. So I think the way the numbers have been, and we've seen the traction overall manufacturing activities coming back into the play. So I think most important, which is linked, is commercial vehicles. So I think in that space, Ashok Leyland remains the top pick. So I think Maruti in a passenger vehicle and commercial vehicle, what we like is Ashok Leyland.
Other one which is worth revisiting, Naresh, is Tech Mahindra. This has been one of those stocks where there is a lot of hope, there is a lot of hype that change of management will change the fortunes. The stock also has done reasonably well for itself in this year.
So Tech Mahindra relatively has seen more volatile moves in terms of the stock rallies up, corrects a lot more, does not, it basically takes one step up, one step back, and it's been a very slow rally in this move. But the last breakout for the stock was closer to this 1150 to 1180 mark. The stock has come closer to 1200 2 days back. So seems like this is an area where it should ideally bounce back from. And from the highs of 1800 back in 2020, and the correction is still pretty large. So it's not a stock which has recovered massively like the rest of the mid-cap names. So out here, a slow and steady recovery towards 1300, 1350. I would not expect it to break 1150, but the momentum is not great. But at these prices, this could be a good opportunity, but one will have to have patience.
Give Nifty 80 points higher. The world is not a shaky place. I'm purely talking about the financial markets here. Our heart goes out to what's happened in Israel. But in terms of the financial market impact, whether it's US market, now US market is the most sensitive market because of the existing relationship with Israel. I mean, Israel is US ally. The dependence and the interdependence on each other is very strong, whether in terms of technology, whether in terms of defense, whether in terms of collaboration. So just imagine the handover from US markets last night. Look at the US, look at Dow, look at S&P. It's like they've just moved on. US bond yields from 4.8, they've come down to 4.6. So frankly, from a US market standpoint, from a global market standpoint, why we still Nifty? I show US markets. The US market has shrugged it off. That I think is very, very crucial. That's volatility index for you, Bitcoin, gold, volatility index. Let's look at CBOE VIX also. That also will tell you that how things are moving up in terms of the stack. And there is more green than red. There is little volatility and there is no reason for financial markets to panic. So Kunal, yesterday we were thinking, I think Sona lene ka samay aa gaya. Right? It appeared like that. But there is no like real follow back rally in gold.
Yeah, if the markets can survive Russia and Ukraine and still make a new high, I think this could be digested like maybe in a couple of days.
And the other one, Kunal, is that crude has not seen any follow-up rally. It is below 90.
So, and that's the classical point. So, from 97, I think 97, 98 was the high for crude. We fell to almost sub 85 levels. Yesterday, we jumped up to, I think, 86.8 or 87 plus for Brent crude. So, after a $13, $14 drop, if you see crude rising up by just about few dollars, a couple of dollars, we still believe that, it's nowhere close to a scare or a fear kind of a scenario for the indices or for this asset class. And as it is, I think when we've seen such a sharp sell-off in terms of crude oil, we'll probably expect more downward trend or downwards push for these asset classes. So there could be intermittent bounce into this asset class like what we saw yesterday, but then eventually these asset classes, they tend to get into a corrective phase. So I would actually expect crude to maybe slowly and gradually come back towards that 80 short mark. So would not be too much optimistic on the near-term prospects of this asset class.
Okay, that's the take coming in on the impact of the Israel-Hamas conflict. But in the meantime, let's also get a sense of what's going to happen with the mid and the small caps. And Naresh, what are your mid-cap picks?
So would be playing a little more defensive here. A buy on Indigo. The stock has corrected back to 2450, 2470 levels. Give a breakout about 2420. A reversal looks like a good entry point here. The trend is positive. The reversal is done. So next move could be towards 2600 plus the stop loss at 2400.
Kunal, what about your mid-cap strategies?
I'll go with the buy on VIP Industries. That stock is bouncing back from its 50-day moving average, completing or just about to complete a bullish flag pattern. So the risk reward is attractive to enter at current levels. Targets of 700, stop loss 660.
Okay, let's get a move on then and take